Hello traders, how are you? Vladimir Ribakov here, Traders Academy Club. Welcome to the weekly Forex forecast for the week starting of 7th of April to the 12th of April 2019. Non-farm payrolls is over and maybe we are in front of the next interesting moves. I prepared a very interesting list for this week, so keep watching. Before we start, as always, thank you very much for watching and for your time. I hope my video helps you to make better trading decisions and to put your focus on the right instruments to trade. If you are new to the channel, I invite you to subscribe and to join us in a free Telegram channel right below my video. You would find the link in the description. On Monday, as always, I publish my weekly forecast in a PDF format, so this is the way it looks like. Okay, today we will review that and see what was developed, how what's relevant, what's not, what has to be updated, what succeeded, what failed, and so on. So basically the idea is my goal is always to show you that even for the long-term trading, sometimes it's easier than short-term. When you have your plan, you know your validation, you know your invalidation, you have easy follow-up, and you can make a lot of beautiful profits. That's the idea of the forecast and the follow-up and full transparency over the forecast and the reviews. So it's all done for you. So as I said, on Monday I will publish the this week forecast PDF version. Keep in mind, this is not a replacement for the video, so make sure you understand my notes from the video. This is a summary. So let's begin. We will review what happened here this week, and let's start with the pound dollar. The idea of the pound dollar was bullish, and as long as this trend line would hold, ignoring this spike, we would be looking for the buys. So one of the things that I wanted to see is two waves on a daily chart or a range, and basically bullish turnaround on the 4-hour chart. So what happened with the pound this week was that first of all, it's still moving inside this range, right? The fact it's dancing on the bottom of it is a bit suspicious, but we are still within the pattern of the range, and basically we still have a hold above this trend line. But the only one thing that bothers me right now, as I showed you before, what I was looking for is to see 3 higher highs and higher lows on the 4-hour chart. But instead of that, what we got was just 2 of them. 1, 2. And after that, a breakout. This is a weakness of the bullish pressure at that moment. So my personal view for the pound dollar was and remains only looking for the buy setups. However, right now I don't see anything clear. So for me, the pound dollar could easily continue to dance here around the range for a while, or could easily go and make some deeper 2 waves here before the next further buys. At that moment, I don't see anything that could provide us the next interest to watch that. As I explained, we do not have the new regained bullish trend by having higher highs and higher lows. Therefore, the pound dollar at this stage is moving to neutral. So this is the update to our pound dollar. The euro versus the pound, our goal was very simple and remains simple. We are in a corrective cycle right now, as we've had double cycle here. We are looking for corrective cycle that could be a range, or that could be 2 waves. Our plan would be always sell. That's our plan. And let me explain why quickly. Go over that. We are trading here a triple cycle, 3-wave push, a bearish divergence. And basically our goal is to complete 2 cycles or to complete a ranging correction. Why? Because corrections normally happen in a structure of 2 cycles, A, B, C, D, 1, 2, 3, 4, alpha, beta, gamma, delta, call it whatever you prefer. the idea is the same, 4 points in the corrective cycle, or we go in a consolidation structure, a ranging cycle that might fit in here. So we are still bearish as there is no reversal over the trend. The plan remains the same. We are still holding the range, therefore sell the rallies would be the plan, and that could happen any moment from the top of the range. Or remember, 2 waves and sell. It always would be the case for us. The way to confirm that would be always to go to lower time frame and make sure you have your sell confirmed and ready to go. So this is pretty much what happens with the euro versus the pound, unchanged. This is a long-term plan, so just a follow-up. CAD Franc, our plan was bullish. I wanted to see, as you remember, 3 higher highs, higher lows, and then look for retraces and continue to buy. This is the CAD Franc, so quickly, why again I am after the buys here. Basically, that was the case. Well, weekly doesn't really offer us much. It's kind of a consolidation here, doesn't really provide anything interesting. For the very long term, I am bullish due to this cycle, and that's what I would expect. Now, of course, that's been a long time, so you would probably see me talking a lot about the CAD Franc. So I wanted to see these 2 waves and a break of a trend line, which happened, and also on the 4-hour chart I wanted to see, as you just saw here, 3 higher highs and higher lows going up. Let's go here, and this is what we got. So basically my plan now is this retraces and look for buy setups. Our invalidation level would be right here. Why it's important to have invalidation? Because if we break through this level, we can't at this stage know, are we going all the way here, or is that going to be just a false breakout with the next divergence to form? As for now, we can't, when breakout happens, we can't ever predict. And that's why if it does break, it will invalidate and make us look for the next setups to be developed. But until that holds, my plan was and remains retraces and bullish setup. So the way I would be looking to approach it is exactly this. Get this movement, provide maybe trend line here, some bullish hidden divergence, right? And look for the next further buys. This is my plan for the CAD versus the Franc. So the next one, and before we move on, I would like once again to invite you to subscribe to the channel. In case you are new to the channel, to do so, go on the subscribe button. Just remember, please hit this ring if you would like to be notified every time I upload my work to my channel. I would like to ask your help as well. 2 minutes of your time. Please leave your comment below in the video. Let me know what you think about my work. If you have any question about any of the trading ideas, if you want me to cover something from your instruments that I did not cover, and of course you can share that with anyone who you think could find a benefit by watching it. Next one on the list was the Aussie versus the dollar. Now my goal here for long term, as you remember from the monthly, is a buy. The plan was, as we hold above the daily trend line break, and if we manage to break through the range, we would be looking for buys, and if not, we would be looking for a new low. That was the full plan for the Aussie dollar. Now let's take a look what happens here. The daily did break the trend line, as you remember. I wanted to see this range being broken up, and then easy decision for the rally. It never happened, and this possibility still remains on for the next divergence. So personally, as long as this holds, I am after buys. The only problem I have with this pair right now, that the movements are pretty ugly. This could easily represent some kind of short-term bearish momentum, maybe even to create new low from the daily before the rallies. However, if we do go and manage to real break it, and after the retest, looking for buys here. So my personal view remains only looking for buys. I would completely ignore sells. I might be wrong here. And when I make such a decision, that means I totally am okay by missing an opportunity. And my approach is I prefer to miss than to regret. My view here is bullish for the long term. This is what I see on this pair, as you know. We got a beautiful candle pattern here. It was a kicker. Then we got a bullish divergence here. Right, so I would expect long-term rallies here. The shorter term, daily chart and so on, would have to fit in. Currently, they don't have the momentum. It would be regained. That's why personally, I would ignore any sell here. Even though I might be wrong and I might miss an opportunity, I prefer to miss than to regret. That's my personal approach in trading. So that's my view for Aussie dollar. I am after buys. I don't see currently nothing yet. Make it more interesting than it used to be for a few weeks now. It's ranging on a daily chart. Euro Aussie, our plan was and remains bearish to sell, and here what we get right now. Let me quickly remind you where it all comes from. A triple cycle from the monthly chart, which makes it to be a valid correction as to waves or some range here. So the idea is looking for sells. Daily chart really maintained the bearish momentum. What do we need to pay attention to? We are currently at the bottom of the channel, and the 4-hour chart does create here some kind of divergence. So the Euro Aussie might make some corrections before the sells. That could easily also create something like that before the next portion for sells. So the long-term sells plan does not change. I keep holding my long-term sells. Quick reminder, we started to discuss about the sells once we reached this top, and we got this candle pattern, the engulfing candle pattern. That's the moment where we actually became bearish. My long-term plan holds. Short-term, for those of you who prefer to look for short-term opportunities, look for corrective cycles. That could be two waves, ranges, and hidden divergences. In that case was good because there was nothing against us from the daily. So the hidden divergence here was actually a good call. So rallies to be sold, that's the idea. Due to the 4-hour chart development, rallies are acceptable for the short term, but they will be to keep providing us some sell opportunity. Euro dollar that was our plan. We are looking for the drops and to buy after this convergence. We got a convergence on a daily, so I wanted to see here dancing around this zone, and that's pretty much what it does. Nothing really happened since. It can easily push slightly lower to the 61.8 of the weekly and then start the rally. Easy, no problems with that. What will make the euro dollar, my view, what will make it change would be if we start to get this structure, pure price action. Pure price action. If highs creating in 3 highs creating in a row and 3 lows creating 3 higher lows creating in a row, sorry, then it will be good call for a possible trend change and bullish trend to begin. So this is about the euro dollar, and if it doesn't turn around, then we should see that trying to reach the monthly level and the weekly level, come to this trend line, right, and from there very likely to bounce. So meanwhile, the short-term pressure remains bearish. I do want to see the lows and the reversal due to the weekly cycle. Once this one is reached, we should, and with this the divergence creating, that should be the next shot. So get ready, it will build up within several weeks. How many? No one can predict and say, but stay tuned. Euro Kiwi. Now this turned to be one of the best calls and the best trades I personally experienced. Our plan was bullish due to the engulfing that we got here with the daily cycle that was here. So the idea was get the retrace, bullish hidden divergence to form, and get the continuation. And that's exactly what we managed to get. This is what I call a boom. Now we got a beautiful movement here, several hundreds of points. Now the question is what's next. Now we don't have anything changed from the weekly. Daily still is bullish, still creating its correction. So short-term corrections are acceptable. They might happen, but then we should be looking again for future buys. So bullish, my view was and remains due to, look at that, after the daily corrective cycle, right? Due to the fact that this was the cycle here, and we might get a two waves correction or a range correction. Both lead us pretty much to a massive resistance, and the fact that the 4-hour chart does show a possible divergence, I think that this area might be a blockage area. So we might see from this zone, right, we might see some pressure going down for short term, or maybe even try to spike through and then go down, no problem with that. And then I would again go back to look for possible buys. Don't try to bet where will be the retrace. Look for false breaks, look for lower lows, right? So for all those of you who are looking for that, because that looks tempting, right? But that can easily make something like that. And that's why don't rush to make conclusions. Wait for a false breakout. This is a false breakout, and lower lows, or the structure of lower highs, lower lows, which I always talk about in my views, and then look for sell the rallies. Okay, for short term, because for longer term, as I explained before, I would still be looking for the buys. New Zealand and Canadian, another great trade for us. A long story short, weekly has two waves and bearish engulfing, bearish divergence in play. Daily had a false break for us with the divergence on the moving, where is my button? Here. Moving averages, this was the false breakout. And our plan was bearish break of the trend line would give us the great okay. And the 4-hour chart, what we wanted to see is rally and sell. Now that's a long story short, right? And this is where we stand. So the good news, the trend line is broken from the daily chart, and the better news, we wanted to see some rally on the 4-hour chart and sell. Boom. This beautiful movement paid us. Now we in a position where we get it developing some kind of slowdown. What does that mean? That means normally that when I am in such positions, I cash out partial of my trades, put the money in the pocket, and remember, in trading, the bottom line always is make money. How well you draw the lines, how amazingly, how epic is your knowledge, how amazingly you can make your technical analysis. All that is secondary, because if with all the beautiful lines and so on you don't manage to make money, then trading is problematic. In trading, the most important thing is to make money, and you make money when you do two things mainly. One, synchronized few time frames to get clear picture and improve your chances. Two, improve your entry accordingly, because when you trade with few time frames synchronized, you improve your chances to be with the direction, with the correct direction, and you improve your chances to enter when the momentum is strong. And three, did I say two before? Three is when you are able to listen to what the market tells you, because when the market tells you be careful, and that again comes from a few time frame. Daily, 4-hour has triple cycle and a bullish divergence developing. They didn't say developed, but developing. And the daily time frame show a possibility of this bullish hidden divergence to come as well. So partial cash out for me is the smartest thing to do, because in this area we could easily see the New Zealandian CAD making the reversals for short term, and after that go for very likely further sells. Okay, so that's my view on the New Zealand CAD. For all those of you who did enjoy this beautiful pair and this beautiful ride, make sure you don't let your winner turn to be a loser, because sometimes traders fill themselves with a belief it will be fine. Now I'll hit, now I'll make a lot of pips, and it's wrong approach, because when the market gives you signs against, you better listen to the market. No trader on earth, not me, and no one knows better than the market, the entire market. So we should listen to it. When it's synchronized, when it gives us the what I call the ideal in terms of odds to be right entry, and that happens when everything is synchronized for us, and mainly when we are able to listen to the market when it's good time to make some money in the pocket. Now that could be partial cash out, it could be fully cash out and then look for retraces and return, or that could be just trail your stop loss or just move your to break even. But the most important thing, do not let a winner turn a loser when the market gives signs against you. That's very, very important thing. So New Zealand and Canadian also was wonderful. Dollar yen, I was looking to sell if and when the trend line is broken to the downside, or if it breaks up, start looking for the buys. So the dollar yen, this was my trend line. It never broke down, so no sells for me. And alternatively, what did happen was the break of this trend line. Now that brings the question, so what's next? As I told before, we don't really have any clear cycles from the weekly or the daily chart, but that does make a possibility that we are building here some two waves until the next divergence would be recreated. Now, if that's the case, daily should go and finalize its movement. If we measure all this movement, that brings us towards an area of 114. So basically, as long as we don't turn bearish again by creating a false breakout or by making lower highs, lower lows, the plan for the dollar yen could easily remain something like that, and then we will be back to sells. Keep in mind that if it does hold this area as possibly a double top or a false breakout and then provide us the turnaround, the dollar yen might go and continue for the sells. If that doesn't happen and the bulls maintain their control, dollar yen easily could take us towards the level of, well, close to 114, maybe even higher. But that's pretty much where the cycles stand at this stage. This is for the dollar yen. Next one, before I move on to commodities, I have three more opportunities. Euro versus the Franc is developing, and I say developing because it never ticked up yet. So developing bullish weekly divergence, but the daily does not have divergence on its part. So there is a very good chance that as long as this invalidation trendline holds, this could turn to be one more push down and then rallies. And this is what I will be looking to basically work with. If we manage to get something like that, we can easily go and look for some sells here. That's pretty much my view with the euro versus the franc. And if it does the new low, which I'm looking for, then this divergence to be created and looking for the buys, very likely for some longer run. Next one on the list is Aussie versus the Kiwi. Now this one is a monster. Some time ago, I think a week or week and a half ago, I recorded a video about two great opportunities to trade. That's Aussie Kiwi and the Euro Kiwi. If you missed this video, next to my picture here, you'll see this line popping right now. click on that and it will direct you to this video I'm talking about. See my detailed explanation about these two opportunities. Long story short, with the big cycles that we have here and the bottom of the range we have here, I'm only after buys. I think we are going to above 106, maybe 107 before we should see some fights from the bears. So personally, I think we're going to see that continue rallying. Daily cycle, the daily time frame created for us here, false breaks and a range, beautiful candle structure. So long story short, we are bullish. On the 4-hour chart, we do face some kind of a cycle that might slow it down, and that would be very possible to see some corrections here before we continue further upside. So my view here, buy the retraces with bullish evidences. And the next one and the last one I have here as a new before we move to commodities is Aussie versus the Franc. The idea for me is that the last weekly divergence is bullish. Daily last divergence is bullish. And that's why personally I think this is pretty much what's happening. This might be the invalidation. And the 4-hour chart makes 3 higher highs, and I know it doesn't look like, but that's 3 higher lows as well. So pretty much my plan here is buy retraces with bullish evidence. Bullish evidence could be some bullish hidden divergence here. It could be 2 waves, or it could simply be some kind of a range and breakout. So keep in mind this pair, look for good retraces and bullish evidences. That's what we want to see here. And now gold and silver. So our idea is that for the daily, remember a couple of weeks ago we were looking for this sell, which finally pays beautifully on the last 2 weeks. Previous week I told you start to get ready for possible buys. So we still might see that dancing a bit lower until the divergence completely recreates, right? And again, we should be starting looking for the buys, or alternatively, if the 4-hour chart starts to build for us again, turn around with higher highs, higher lows, then we can talk about buys again. If it doesn't happen, and as long as it doesn't happen, we can see that going and pushing up from a new low. Same exactly with silver, which could easily play here for some time until divergence is created. And the alternative on the lower time frame, look for the bullish evidences, like going above this high, like creating higher highs, and then providing us the buy opportunity. Now these two work pretty beautifully, and we should follow that for the long term. Now oil, one of the scenarios I wanted to see is for, before I continue my sells, before I actually look to make my sells, was to create a false breakout here over this area. And if it wouldn't happen, which actually did not happen, I'll show you in a minute, was that here, as you can see, if 61.8 doesn't hold, then we are very likely aiming for the 100. So when I took on the oil, this was the place where I was looking for the false breakout to happen and then provide a sell opportunity. It never happened, and instead the 61 level here was penetrated, and we are moving to the 100 level. And this is the next place I believe the pair is taking us, the commodity is taking us towards. So we have here a beautiful magnet zone of these two cycles. This is where it should slow down and start its bearish movement. Keep in mind that the 4-hour chart should fit in. 4-hour chart is making a beautiful movement now after this bullish hidden divergence, making it as it should be. And once we are facing here this divergence, completing, looking for sell evidences. False breakouts, lower lows, lower highs, good candle patterns combination, and so on, and looking for the sell setups to go and happen. Indices, let's start with the dollar versus the index, which I wanted to see a potential new high there. Dollar index, here we are. So basically nothing really changed, and where this 361.8 came from, nothing really changed here. My view still remains the same. It could be a triple top and a hold with a move down, or likely to get some kind of a rally here and then complete and look for the next sell. That would be pretty much a mirror to the euro versus the dollar, but once this divergence is activated, it becomes a critical place here for the index. We are very likely going to see the move down starting soon in the next several weeks. Then we had the DAX. Now after this convergence on a daily chart, what I was looking to do is two waves and a trendline breakout and then go for sells. That was my plan for the DAX. Now this was the convergence, but the problem was that the retrace was too sharp, and the trendline I was looking for was never broken. Instead of that, and that did not provide a good sell opportunity here. Instead of that, we went through all the Fibonacci retraces level in one shot. That's a warning sign, and that's a sign to leave the DAX alone. The next level to watch, as for now I'm neutral here. The next level to watch is currently we have the 100. If it will hold on the next period here, it would be good, of course, right? And then we can start looking for sells again. But the suspicious level here is actually this. And there is a good chance that we would see that making this before the next further sells. Don't get confused here, because the long-term plan was still sells after this triple cycle. Okay, so this is what I pretty much expect to happen. Weekly has and building up its bearish hidden divergence. Daily would have to fit in. Currently it's not, and that's why I am neutral at this stage, waiting patiently for my next opportunity. Same exactly with the NASDAQ. Now this one is a monster, because this convergence from the weekly chart, it's only question of time until it hits. The problem after convergences, that sometimes we are moving as we get a false break here and a false break here. The corrective cycle could be a range, and that means one more false breakout is a possibility, and very likely it will try to happen. And as long as we don't have new reversals, and I explained before, I explained my life telling rooms, to be honest. After this engulfing, once we don't have a hold of such an engulfing and the structure of lower highs, lower lows, and instead of that we get one retrace over all the Fibonacci's. This is a complete warning sign from the market, which says I'm not ready. And traders have in such situations always two variations: or to marry their ideas and to say it will be fine, it for sure will go down, and expose themselves to huge risk. And the second option, which I prefer in such cases, is to cut. If you understand that your view doesn't develop, cut your trade. Remember, performance is getting better not just by generating more profits, but mainly by being able to cut your losers early. It's very important. I know it sounds easy from my mouth, and it's much harder to implement, but when you understand the logic, you increase your chances to take this action and cut. And if you don't cut, normally it happens for one reason: you are overexposed. Because when you are overexposed and you have too much money, there is no such thing too much money, it's only excuses we tell ourselves, but when you are too exposed and you have too much money in a loss floating, you find yourself convincing yourself, telling it will be fine, it will have to crash, and that's the dangerous place. You rely on luck, not on fact. You rely on luck. Sometimes it might work, but that's definitely not a strategy to use for profitable trading for long term. Remember that, my friends. That's what I wanted to show you that. So for me, indices are completely neutral at this stage, and I'll be looking for better opportunities. So that's pretty much what we have here. I would like to invite you to join me in the live trading rooms. We have a live trading room on every single day. Enjoy detailed trading reports that we publish in the Traders Academy Club day after day, and enjoy our amazing community that we have in the Telegram, dedicated Telegram channels dedicated to the Academy. So I invite you to join us, and I hope to see you with us there. I'll see you soon. Thank you very much for your time watching my videos. I wish you a wonderful week. Yours, Vladimir Ribakov, Traders Academy Club. Ciao for now.